Ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. This is a Forex technical report for the date of September 7, 2022. We have the dollar yen moving sharply higher. We have Bank of Canada interest rate decision at 10 a.m. Be aware, be prepared. The dollar yen continues to trend. What is a trending market? A trending market is fast, directional, tends to go farther than what traders expect. That's what we're seeing in the dollar yen today as it continues its run to the upside. I did a video on this exact same point yesterday, late yesterday, called Trends Are Fast, Directional, and Tend to Go Farther Than What Traders Expect. And that's what we're seeing. So go to our website. If you click over here or look over here in the must read section, click on this Trends Are Fast, Directional, and Tend to Go Further Than They Expect. And hopefully you'll gain something from it. As far as the dollar yen goes, we saw a big sharp move to the upside yesterday. That move to the upside took the price above this topside trend line. And note that we corrected a little bit into the close and came right back down to the top side of that, broken trend line. Found support buyers there, and then started the run to the upside, sort of a step process in the move. The move today has seen the dollar yen move up from about 142.66 to 144.98, another 230 or 40 basis points. We're just below the 145 level, a sort of natural level of resistance to get to and through. A move above that level would have traders looking, if we go to something longer here, this is the 1 month chart. We're looking toward, there's really nothing to the upside until we start to get toward the 147.65 level. This is a monthly chart, and if you go back all the way back to 1982 and put a Fibonacci retracement, 38.2% comes in at 152.707. So is there room to roam? Perhaps. We are at 24-year highs, though, or moving toward 24-year highs, or actually we're at 24-year highs, but a move above the high price at 147.65 would take the price to a new, going back to 1990, so that would be 32-year high. It's a different time from over here to where we are here. As far as currencies go, and economies and so on and so forth. So it's hard necessarily to compare, but if the market gets ahead of steam and trends are fast, directional, tend to go to further than what traders expect, we could in effect head up to that level now, or toward this high level, and maybe even the 38.2% retracement. You never know. What I do know is that the finance minister Suzuki came out and did say that the moves are one direction, and that doesn't necessarily see it as a good thing for the dollar yen to move in such a fast direction to the upside. So there could be a potential for some intervention. We have to be prepared. That increases the risk for you as a trader, and so it just be aware. Nevertheless, the fundamentals for the move to the upside are that the U.S. is raising rates. There's a Wall Street Journal article saying that odds on that it's going to be a 75 basis point hike. We had Barkin come in the I think the FT and say that he was looking for 75 basis points. So that's where it's going. Meanwhile, the Bank of Japan continues to support its yield curve control policy, keeping rates lower, and that's causing the dollar yen to move to the upside. So fundamentals and technicals are driving this pair to the upside. If we take a look at the 5-minute chart, I want to look at that because we get an idea of a risk and close bias changes when you get this. Obviously the market is probably overbought. If you looked at any of the oscillators out there, I'm sure they're showing overbought or maybe diverging RSIs as well. And so, but for me, I need to see some technical reason why the price has a reason to go down. And if I take a look at the move yesterday, we basically moved above a flattening 100 and 200 hour bar moving average here, and then trended, and then it's kind of sideways our market through the 100 bar moving average early in the Asian session. But Since then, even this correction right here found support against the 100 bar moving average, and we've been able to stay above that 100 bar moving average. This is moving to the upside. It's currently at 144.28. So you can imagine it's a move higher here and into what the correction zone of this last trend leg to the upside. That's all the price move up from about 143.75 until 144.98. 38.2 to 50% of that leg to the upside comes between 144.51 and 144.36. The 100 bar moving average is moving to the upside. So in the short term, we need to get below those levels to increase the increase the bearish bias, to give the sellers some hope, and it would have to stay below those levels to keep that bias to the downside. Absent that, folks, and the buyers are still in control. Okay, the buyers are still in control, and that's the way I like to look at it. I'm not going to try to pick a top in a trending market, because trends tend to go fast, directional, and farther than you expect. But you can pick a top if you see some weakness in the technicals and it stays that way. So get below the 38.2, 50%, 100 bar moving average, and we could see further corrective move. The next target would be the rising 200 bar moving average on the 5-minute chart. It's just the closest levels that you can take a look at. It's just the closest levels that you can take a look at in this currency pair. The next currency pair I want to take a look at is the dollar versus Canada. Why? Because we have the expectations of a 75 basis point hike at 10 a.m. What we saw in the price action over the last few days is up and down price action. Yesterday we did, in the Asian session, move below the 100-hour moving average after testing it the prior day here into the New York afternoon session, or the afternoon session. The price, though, yesterday moved down and held support against this swing area. I'm going to put it on a 4-hour chart here to show you the importance of that swing area. Swing high, swing high, swing high, move up, a break above, swing low, break below, swing high, swing high. Some consolidation above and below the level here before moving to the upside here. And the last week on Friday we came down, tested the low of this swing area, and then we also tested the low right here this week. So this area is going to be a key level on the downside. If we get, let's say a 75 basis point hike and we suddenly see Canada move sharply to the upside, getting below that level this area would be important. Now on the top side, we do have what is, the double top here, the price action today. I'm going to go back to the hourly chart. The price action today saw the pair stay above the 100-hour moving average in the Asian session, move up to test the high price that we saw last week, and then come back down and retest the 100-hour moving average. So guess what, folks? Double top up here, 100-hour moving average below are our short-term barometers. If we get below that level, 200-hour moving average, and then this swing area, if we get below these areas, and the bias tilts more to the downside, at least in the short term, for the dollar versus Canada. So be aware and be prepared. Quick look at the euro versus US dollar. We stay below the 100-hour moving average and up and down trading here for that currency pair. Did just move down to a low that took out this low and this low just by a few pips, but bounced above that level. So there's somewhat an interest, although the dollar is going much stronger versus yen, it's not necessarily going stronger versus the euro versus US dollar, just a little bit stronger. Now the sterling versus US dollar, that made another new low. This is a new low going back to the pandemic and getting closer to the pandemic low. As a matter of fact, the pandemic low came in at 114.08, and the low price today reached 114.13. So there is this key 2020 low that we're testing in the sterling versus US dollar. We've been talking about it. We'll see if the market can get below that level. If we get below that level, it increases the bearish bias, takes the pound to the lowest level since I don't know when. So it's not on my chart, but don't have it on my chart, but I'm sure it's back down a number of years for that currency pair. I'll take a look at that a little bit later and post it on a post at forexlive.com. So there you have it. A detailed look at the dollar versus yen. I think it's important, and some of the other currency pairs, including the Canadian dollar, as we head into that interest rate decision. My name is Greg Renkolowski. Good fortune with your trading. Bye bye now.